Fund managers, asset managers generally, probably on a global basis, have been surprised at how stable markets have been over the last 3 to 6 months. Yes, we've had talk of tapering in the States. We've certainly seen no sign of real improvement, economic improvement in my opinion, in some of the peripheral southern European countries, yet markets have been actually pretty stable. Government bond yields rose early in the year, but actually over the last 3 to 4 months have actually been fairly stable. Credit spreads, on the other hand, have continued to decline. Basically, investors are becoming more optimistic about credit valuations. Look at global high yield markets. Actually, they've been doing very well against this background. So actually, we've had a period over the summer of reasonably stable markets. So the big question is, what's going to happen towards the end of the year and into Q1? My view is that actually we should expect to see increased market volatility. There are some trends out there that actually will pressurize markets. So what are those trends? Well, we're seeing some development in the US in terms of the debt, and that's going to be an issue going forward. But I think one of the key points will be about the inability of Europe to grow. Europe has been off the agenda as a major macro factor for 12 to 18 months. I think that's going to come back. I think that's going to cause volatility in markets. You've heard me talk in the past about this one-size-fits-all currency not working. That's still the case. I think that's going to pressurize markets early in 2014. I'm a big fan of America. I think it's an economy and it's a people that actually is the way forward. They're an entrepreneurial people. I think they're being let down by their politicians. So it's a great country led, I think, by poor politicians at the moment. If we look at the debt level, actually the US has made significant progress in reducing its deficit over the last 2 years. As a structural budget deficit, there's actually been quite a decline there. And that's really good because the US, although growth has been sluggish, has still been able to get growth in an environment in which there has been fiscal retrenchment. Now, what we're seeing at the moment is politicians squabbling. It's basically their positioning for elections. And I think one of the problems that we have in America is that actually their politicians don't change a lot. They're safe in their seats. And that entrenches views. They don't have to reflect the views of the electorate. So what we're seeing is squabbling. The right wing, the Republicans, the left wing, the Democrats, they can't agree. The question is it form or substance? My view is it's substance. It's a very philosophical issue. Can you get growth? How do you get growth? Is it through spending your way? Or is it through tax cuts and improving the productivity in the economy? So there is a real philosophical divide. Coming back particularly to the current issue, I think there will be a solution. It will be a partial solution, a temporary solution. The debt ceiling will be raised. But fundamentally, we are seeing this struggle. And this struggle between the politicians will carry on. And as I say, I think that is one thing that actually is a possibility to destabilize world markets. And it's a pity because, as I said right at the beginning, the US is a great country led by poor politicians at the moment.